Good morning, everyone. Welcome to the Euro trade. Let's have a look at some metal markets. Maybe have a peek at DAX, even though we don't have it yet. If we're meeting for the first time, my name is Market Stalker D, aka Deeyana Angelo. I've been trading for 18 years, specializing in the commodities markets mainly. I have a Series 3, but I'm not a CTA, so everything we talk about today is for educational purposes only. Please read the risk disclaimer that Bruno posted earlier in the chat. All right. Also, apologies for starting a few minutes late. I was messing around with the camera over the weekend and managed to mess things up, so I had to get it back to how it should be. All right, I've been liking silver quite a lot recently. Let's have a look at this daily time frame. So on the daily chart, we had a smash through the previous high and then a bit of a pullback. I'm just going to see exactly how much we pull back. And I'm going to do that in relation to the previous swing high and low. Right, so almost to the 50% here, but just by the fact that we never even reached halfway mark, this could be a little bullish. But if they are not able to hold the Friday's low, to me that would be more dangerous. But as it stands now, we tagged pretty much the 50 level, and the Asia and early London is trying to bounce away from that area. So again, that could be a bullish sign, right? Let's have a look at what we have on the options side. Yeah, so there is a put support from end of day trading at 5,500. And another thing that I like to do is to locate the GEX2 level, because it tends to be quite a good level to run opposite trades from. And that level is set at 51.25. So I'm going to drop down to a 30-minute time frame. And then start by marking 51 to 25. So it's not too far. I do think that this is going to be the orientation for the day. And there are some other GEX levels bunched up around that area. But yeah, like I said, put support was at 500. Mark that as well. Next thing is Asia high, Asia low. Now I can see that Asia high was already taken. So at the moment that kind of failed. So Asia low is down here. And I'm going to change the color of it just to delineate it from the rest of it. This is already London open, so we had the smash through the high and a prompt reversal, but at the moment that's not really holding into any kind of a serious swing. So again, probably bullish there as well. Let's have a look at the Comex value areas. Right now we're dead in the middle of it, but I'm going to do it in a slightly different way. So I'm going to expand this fixed volume profile. And the purple area is the value area from Friday. You can see we're right in the middle of it. And the Asia range pretty much stayed contained inside it. So until that changes, there's not really too many momentum type trades to do. So in order for me to run proper longs, I would need to see the price go basically above Asia high and GEX2. And then we may have a trending day upside. If it fails that, the 500 level along with Asia low are the 2 points where you also want to look for further longs. If they break down, then we're going to have a change of sentiment and we will be going lower on the daily to maybe go below the 50% retracement, and then we have space to reach this form of demand all the way down towards 46 level, 48 level, because that's a pretty large time frame because it's on a daily chart. And yeah, let's have a look at quantitative extremes now. ADR high is sitting just below 52. It's at 51.91. And as always, it's a zone, right? It's not like if I say, oh yeah, it's 91. It's obviously an area where we should tag it before something happens there. So whether it's a reversal or we go into an outlier day, that's another issue. But at the moment, ADR and ADRs are basically far away. Not much to derive from that at this particular time of day. The ADR low is sat at 29,330. And with that, we have a bit of a framework to work from. So on Friday, there was a Comex high just above GEX2. So again, another reason why maybe you want to see how the price behaves around there and then see what we have. But at the moment, I'm a little bit bullish on silver for today. I would like to see it creep above the value high for sure, for any kind of more serious trending move. But in the most ideal situation, we could basically wick down to 500 and then continue the rise. That would give a better risk profile on the entire risk reward, and it would give me some space to work towards this GEX2 so that I know what they want to do with it. Buy on gold, any good thoughts? So gold, I mean, gold and silver have been correlated on Friday wildly, like it was a factor of 1. And in fact, there was a factor of 1 across the board for the metals. So I don't know whether, because I didn't trade that much on Friday, so I don't know whether it was maybe some news or something. But let's have a look at gold levels, even though for the last sort of 3 weeks I've stayed away from gold. To me, it's gone a little nuts. All right, so gold has a call wall at 40.80. Obviously, we're above that right now. I would suggest that you hold off on any gold position, especially longs, until a little later in the day, because this is the time of day when gold in particular goes into this sideways movement for the London Open. And at the moment, we are sitting kind of right at a very flat VWAP. And when you look at silver and when you look at gold, actually, let's look at them side by side. VWAP for silver has a little bit more life in it, right? Why? Because it's got a bit more of a slope happening, whereas gold is not really breaking through any meaningful levels. But they did do a similar kind of similar action. So they are still correlated, but I wouldn't say it's a factor of one. Like today, maybe it's going to turn into, but I think they're sitting at about 0.80. Sorry, one of my dogs is going crazy. That's 7. She's a big watchdog. She keeps an eye on anyone driving through the farm. So buys on gold. Since gold is also inside the value area, I would say that it's a balanced market. So this is entire Comex session. I would probably want to see a test of this Asia low before I do anything with long gold, because I hate breakout trading. Absolutely hate it. Over the many years that I've traded, breakouts are always tricky. Like, unless you have, I mean, even during the news, it's really not that great, because the algorithms will kind of wicket both ends before they decide what to do. But yeah, until we get out of this, because, so here's the concept about the value area. Value area is a distribution curve, and everybody should know that there is a statistical probability that when you move away from value, you can either go into a mean reversion or you go into a continuation. But when you're inside it, it means that there is agreement in price. So Asia has not moved gold anywhere outside of that range yet. So it is balanced. Asia agrees, Shanghai agrees that this is where we should be for now. Obviously, Comex is the one that brings a ton of volume, but the next time of day where you want to see whether this Asia low maybe is wicked and then it pulls back into the value, that could be a responsive long. Why responsive? Because responsive is market making activity, and responsive means not necessarily going from value low, but instead trying to get outside of it, failing, and then the market makers pull it back the opposite way. Now, market makers are not really interested in taking prices anywhere. They just want to remain delta neutral. And because of that, they will, on a positive gamma day, they will be hedging against any rally and against any pullback. The only time that changes is if there's something that happens that's extraordinary, so either a tape bomb or a tweet from the president or something, or one of the Fed officials. So anything to do with monetary policies, gold is pretty sensitive to it. And in that occasion, on that occasion, then they, let's say we go into a big upside move, they have to keep buying in order to try and maintain the delta neutrality. So that's how you get these extended, very massive moves. They just kind of keep going. It is all the adjustment of inventory by market makers who have pretty big pockets. So they had to have a pretty good cash flow. And as a part of that job, you typically have a volume on the day that you have to fill, because they are there to create good liquidity and tight spreads for the rest of us. That's their role. But at the moment, since it's balanced, I would really wait for a better trade location to come along. Because where we are, it's literally in the middle of the middle. Ahmed is asking me, do I prefer Dow or NQ in my thoughts? Dow any day. NQ, I think everybody at this point, or almost everybody knows, that since about 2022, I've developed a huge dislike for NQ. Now, YM is somewhat slower, because when you look at the daily ranges, NQ has like 1,500, like for most of this year. I think it's fallen off now a little bit because we're having some dry up of liquidity. No, it has not. Okay. There's me hoping. So currently just the New York session carries 1,500 ticks of the average range, but actually the entire average daily range is even more than that. It's 1,700. That's insane. That's an insane amount of ticks per day. Comparatively, Gold has about 800, but I've learned with the way I do things, I do best with products that have between, I would say, 2 and 400 ticks of range per day. I find them very smooth. I find them to have enough volatility inside them to not have to sit in a trade forever. And anytime a product falls below that number, below sort of 180, 200 per day, it's my time to just just bow out, right? SC is asking, Heidi, when will Black Friday sales start on Blatek indicators? I'm going to reach out to my CTO because he's the one in charge of that. I actually don't I don't have too much control over what Blatek does, even though, you know, I am one of the directors there. But when it comes to what they do with their pricing, I'm in the meetings and stuff, but it's one of those things. It's like they just do whatever they want to do because they're a team of 3 people. And they have their own way of doing things. But yeah, I think they will be doing a sale. When? Probably soon. But, you know, I can reach out to them and then maybe I can find out for you tomorrow. But I am preparing something else. So with Blatek, obviously we have the platform that I think it's kind of gone out of fashion, so to speak, because when we were creating those tools, it was the idea to create professional tools for a retail trader on a platform that back in 2015 was used very extensively by the retail traders over in the UK and Europe, which was MetaTrader. Now, obviously, AMP has an MT5 that has CQG data, so it is real futures. However, we are trying to move away from that. And it's still great. I'm probably still going to stay on MT5 for my main charting purposes. We also have a couple of accounts there. One is corporate, the other one is mine. So yeah, I'm probably not going to be moving away, but we are creating a utility Discord server. It's not a Discord to chat. It's literally just a bot that puts our levels on there. And that's going to be with me explaining the session ranges and exactly how I use them and what they are. And we are going to basically have that as an option over the indicators. Now, obviously, if you want the nice, beautiful tools that also have the backtest mode and a whole bunch of stuff, then yes, you have to get the actual indicators yourself. But the utility Discord will be there for anyone interested in the levels that we have, because I do believe that we have taken the core sort of Dalton version of doing the profile, and also that we have calculated the ADRs in a very specific way, almost like a volatility band. So they are pretty accurate, and many people are interested in them, but they despise MetaTrader. So we're kind of trying to, you know, to serve the community by going whatever the community wants. So we are creating indicators for other offerings, but at the moment we're still working on that. So the Discord utility server is kind of a workaround. So yeah, but yeah, I'll ask about the Black Friday and I will let everybody know. Roosevelt says, do you only care about the closest gamma levels to the current price action? Well, it depends, right? So if we have a lot of GEX levels that are in and around that same area, that would speak more about the range, because you don't have a space between one level to the next, but it's all kind of like bunched up. I don't actually like seeing that. And frankly, I mean, range days are fine, but I'm still not a big fan of them. Over the years, I've learned how to approach them better. So I do have pretty good days on them. The problem is they're labor intensive, right? So you have to typically trade more. The profits are smaller because the risk reward is not there on most times. So if you have a whole bunch of GEX levels, then yeah, that is something that I do take into consideration, but I won't necessarily trade off of them. I will wait for the price to kind of break out of that. So when it comes to the closest GEX levels, yes, I do care about them. because they are the ones that are more likely to be a reaction zone earlier in the day, right? So if I have some level that I'm looking at, like let's say on gold, that we have, you know, where's the next major level? You know, we have a put support at 4,000, and it's been there for like, you know, half an age. So how does it serve me today at this time in the next sort of 6-7 hours when I want to trade? How does it serve me to know that the 4,000 level is 830 ticks away? It doesn't, right? So it means that, you know, you would have to be even more selective than I am, and I'm pretty damn selective, to actually get a good trade out of it. It doesn't, you know, doesn't make much sense. We're day traders, so you need to have a look at what is the closest and then decide what sort of data that particular level is bringing you that you can use in a plan, and that that is going to come in the next couple of hours. Otherwise, what are we doing, right? Sitting here watching all the prices go by and us not being in it. So there is an element of whether this is a realistic area to look at in light of the day's range. And if the level is outside of the day's range, I don't particularly care about it today. I might care tomorrow when we get closer to it, but today it's like, meh, whatever, evs. And, you know, if we do reach it, you know, maybe you have an outlier day at that point, but you might also have the settlement coming up. And if you do reach like 4,000 and it was a big day down, then you can say, well, okay, keep it in your mind, you know, mark it on your chart maybe, but don't get super obsessed. So anything that's outside of the daily range, it's automatically kind of on the back burner for another day when we're maybe closer to that level. So hopefully that makes sense. But yeah, the closest gamma levels is an information that we can use today rather than spending the best days of our lives looking for some perfect setup. Because, you know, I've seen traders who wait for the perfect setup way outside of the day's range. And I'm like, is that realistic? And they're like, I'm just going to wait for that. And then when that doesn't come because it's outside of the day's range, so most days that are normal and they don't have that big of a range, they won't have a setup. So then they start doing stupid things around other levels that are not a part of their plan. So, you know, you need to take in the information of what is right here that maybe we can kind of squeeze a trade out of. And like, for example, on the daily chart, I know that we have some levels lower down on gold, right? If I look at the weekly, I have a level down at 39.02, but I also have a level of interest somewhere down around 3,600. So if we get down there, it will be a time for me to look at some gold miners to actually do a longer term investment. But up here, where we're right now, it's like that's so far away. So is it worth me saying, well, 3,600 is a level of interest for me? Yeah, just not today. But this is why alerts are good. You know, you can have an alert somewhere and, you know, attach a description to it. And then once we're there, you're like, ah, yeah, of course. That's what I was thinking. So annotating and automating certain parts of whatever you're doing is definitely preferable. So I'm just going to clean up some of this chart. And let's also do the Asia high, Asia low here. Not the biggest range. We still haven't tagged either. So here's where silver is a bit stronger compared to gold. And when you use the same markers, you can actually get a pretty decent idea of which one is a more bullish market today. Because if you have the same markers, so let's put it side by side. Just going to get rid of this and this. Put them side by side. both on a 30-minute, both with Asia high, Asia low. Which one smashed through the Asia high? Silver. Gold didn't even get near it. So the way I'm reading this is that silver has a better chance of breaking out of the Asia range. Not to say that gold won't at some point to the upside as well. I am pretty bullish on all the metals across the board, especially as we come into the Christmas period, because there's a natural increase in demand because of, you know, jewelry, presents, and a lot of that. So all of the precious metals, platinum, silver, gold. Not sure about copper. Copper is more, like, it's a bit of an odd one out. But yeah, so it's definitely stronger, right? Now, it's going to take some time for gold to actually reach Asia high. And again, we're pretty dead in the middle here, where silver is slowly tagging this area. So my first hypothesis here would be that we go above Asia high, smack into GEX2, maybe overshoot a little bit, but ultimately lose speed and the will to live. And then come down into the range. Maybe rotate 50% of the Asia range. Don't know if we should expand that because of the bullish nature of all of the metals. So I would typically look for the entire traversion of the Asia range if we're going from the low. So if it's with the trend and we are smashing Asia low and then reversing, I would be looking for full rotation. But because this would be a short, you have to be a little bit more vigilant. But at the moment, this is all just a range trade. Just a range. And let me just attach the fixed range volume profile on silver to the right from Friday, not from today. And, you know, current day's value has its use, but I actually prefer to just look at Bookmap and track how they actually behave around the levels, you know, because you can read sweeps, you can read absorption, you can spot iceberg orders, and you can see whether the volume that's coming in on one side is having an effect on the price or not. If not, then those orders are being absorbed. So if you have a big volume bubble on Bookmap and orders that are going through, so they're not spoofing, it's actual orders, but the price is just not moving, it means that those orders are being absorbed by the opposite side. So naturally, you're going to get a move not in the direction of whatever the bubble is trying to do. Hold on, let me shout at Manny. Right, dealt with a noisy dog. Hopefully, he's probably going to start screaming again. But yeah, so that's kind of how I like to approach my actual entries. And then once I obtain an entry, I just want to see. I mean, it depends on the entry as well. You know, if it's some kind of an intraday swing trade where I feel we're coming away from a swing extreme, then I may just leave it to run for as long as it's going to run, and then I will have a time-based stop. I wouldn't have a price-based target, but rather a time-based one. But again, that's not going to be the case on most days. Those are kind of outlier. Richard says, I'm trying to get back from gold. Can anybody give me a good trade? That's not a good mindset to be in on. You know, going on the internet randomly and just going, somebody give me a trade. Like, nobody has a crystal ball, right? And then if that trade doesn't work out and you get into an even deeper hole, who are you going to blame? Who are you going to call? Account busters. Moonky says you can still trade combines if you have live account. Yeah, so you can trade a combine and you can pass the combine, but all that that's going to do is going to put an XFA on the back burner. You can't activate it. So the only time you can activate it is if you withdraw the live accounts, which should be done with informing the risk team that you're, looking to do that for whatever reason. Maybe you want to put it in longer term investments. Maybe you want to buy a house. Maybe, you want to buy a new car, like whatever it is. But if, I like to have some XFAs on the back burner, like just in case, because you really never know, right? We've seen some very horrid slippage in the past, especially this year, and also during COVID. So, all over the years, I kind of trained myself to see this as a risky endeavor, whatever it is. And that risk disclaimer, never trade with money that you cannot afford to lose and blah, 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 and blah, blah. Well, that sort of applies to the prop account as well. Because prop accounts should be a fun way to generate extra cash, right? And then at some point, maybe it's going to give you windfalls, which is always amazing. But to me, I made that mistake once to just kind of be in one account and not have any backup plan or anything. And psychologically, it was extremely difficult when all of your bills, and the problem with bills, people assume that the bills you have right now, that they will never grow. And I can tell you that's not true, because the more cash you make, suddenly you start having more expensive services, suddenly, maybe you get a bigger house, maybe, and your bills just kind of grow with the lifestyle. So the bills are, your bills should be covered by something that's just coming in. Obviously I have various sources of income. Some of it is investment, some of it is the software development side, some of it is contracting, and then whatever comes in from trading, it's like sort of cherry on top. So to me, it's a better mindset. And I know that I didn't do particularly well when my mortgage was dependent on my only job back then. And I was doing well, but then psychologically, I was just a mess. I was like, what happens if I don't make money? And I was young then, and now I'm not young. And honestly, I'm always like thinking security over anything else. So I always like to have some XFAs waiting in the wings just in case, right? So, this is where I also think that combines are a very good way to practice your skills, because whenever you have to go down to like a $4,500 of maximum loss limit, you can't keep doing some of the more dodgy stuff that you do once you have a decent account buffer. Because, I will take trades that I probably shouldn't be taken generally, and a lot of them work, right? So I'm like, oh, cool. Yeah, just snipe that. That's awesome. But then doing that without a pretty strict and low risk of ruin that you need to exhibit on an eval, because it's a test, it's a challenge, right? So I'm always trying to keep that side of my skills, especially like I am getting a little bit better with my chronic illness. And if that chronic illness has taught me anything, it's to really be careful with my time and my energy levels, because I don't have a lot of energy to work with, right? Maybe I have about 4 hours of usable energy per day. And that means that whatever trades I do, they need to count. So whenever I start to misbehave, and whenever I kind of feel that maybe I still, not even misbehave, but maybe if I see an opportunity, but I've already made money in the live, you need to keep those chops, the trading chops, sharp. So I usually like to practice like bookmap reading, and it's always a little bit different, right? So I will sometimes look at bookmap, and I will try to figure out, once I see an event, I'm like, okay, so now what are they trying to do here? And am I right in reading that? objectively. So this is what I use combines for. It's kind of like an athlete or maybe even a musician. That's close to my heart because I was a musician for 20 years. When you're doing a rehearsal, right? So you wouldn't necessarily just sit on your ass, do nothing, and then somebody calls you up to do a gig with like a big star, and you just kind of rock up without picking up an instrument for like 3 months. You wouldn't do that, right? So you have to like get back to practice. You have to like get those muscles moving. And with us, it's the mind muscle, right? It's the mind muscle connection, speed of thinking. And trading is not rocket science, but there's so many things that that you need to remember in one single moment in order to execute a trading idea. So it's more about the amount of information that you're getting assaulted with. That's the bit that takes a lot of practice. And when I got sick, that went straight out the window, right? Straight out the window. First of all, I had brain fog. And second of all, when I got back to trading, because I actually stopped for quite a few months, and I only held my longer term investments. Maybe did like a few options trades here and there, but it was really just focusing on the daily time frame, and it was crude oil options playing the range effectively. But it was just so bizarre for me to like sit down, and then I'm like, right, how do I do this? It was almost like you forgot everything. It's kind of like learning to speak a language and then not speaking it for a while and then trying to get back into that country and speak fluently. It's not going to happen. You will need practice. So it was the same for me, right? And it took me probably about 3 months before I'm like, oh yeah, that's the setup. Oh my God. Oh yeah, I should have cross-checked with that. Oh, and then at one point my brain was like so messed up that I couldn't even remember what a pullback and a continuation trade should look like on the chart and on Bookmap. It's yeah, crazy. Monkey says, do you still revenge or overtrade on max port accounts? So here's the thing, I never did that. I come from old school prop, where one account is all you get. There's none of this reset after reset, try again after try again. You F up the account that the prop firm has funded you with once, and back in the day you'll be booted out the door. Or you could buy your way in, but you would have to pay something called the collateral, which was anywhere from $10,000 to $30,000. So $10,000 to $30,000. So it wasn't $49. It wasn't even back to funded, whatever it is, like $400, $500, $600. No, it was like tens of thousands of dollars to get back to the funded level. Because at that point, they're like, well, if you want back, you need to put up some money because, we gave you a chance, didn't work. Now you have to put up some money. And so you couldn't full port because there was not like, unless you really wanted to get escorted out of the office, you couldn't. So these days, I think that all of these quick challenges, it's almost like, the speed trading. It's a speed trading, where you try to pass as quickly as possible. It leads to lack of proof of concept. So, I've had so many people in these the last year of the VIPs, and I've done 2 seasons now as a coach. So they go, oh yeah, I have 85% accuracy. And I'm like, okay, cool. And then I look at the stats. After like a month, 2 months, because I usually force people to trade the same account to the best of their ability and to not use resets as a crutch. And I look at their account. It is nowhere near 85%. We're talking on the worst end of the spectrum, somebody who claimed 85% accuracy, they had like 15, because suddenly they had to absorb all of the mess ups, the bad decisions, as well as the good decisions. So when you take all of that, what is your accuracy? It's not 85% over years and years. And that sort of risk of ruin is a metric that you call that. It really gets exposed when you commit to one account. It shows you what all of your trading decisions are really like. So, have a bad day, have a bad week, have a bad month. You can't hit a reset. But what does that do for your overall stats? It's going to get it down, right? Because you're going to lose a lot. So what is that number? Like, what if, if you created a risk model where the accuracy, the true accuracy through all of the good times and bad times, what if you created a risk reward in a way that it can absorb the drawdown period and still not harm you too much? That's the key. So, and all of that, full porting, doing stuff like that is so, first of all, I came from trading just my own money for the first 5 years in 2007. That's when I started. I didn't have a prop firm. Okay, that came 5 years later. But back then, it was just my hard-earned money. So I put that in a brokerage and I traded that up. So do you think I was going to full port that? No, absolutely not. So it was slow, but in 2 years I managed to build just under £250,000, which back then was actually quite a lot more in dollars because the exchange rate was crazy. And it was closer to $500,000. And I was really proud of myself. I'm like, that's great. But for some people these days, they'll be slow. It's like, oh, what, you made $500,000 in 2 years? To me, that's still not slow. To me, that's sustainable. So yeah, I think that the challenges these days, while it's great that the industry is so cheap now, that the cost of entry is incredibly cost effective and affordable to nearly everyone, right? But the issue is that it creates bad trading habits. And I've even heard from, in my personal coaching on the market stalker side, somebody say that they were in a group where blowing up combines was like a business expense. So it's like, since when is that a business expense? It's like, okay, it can be, but they were doing it to like such an extreme way. It's like pass or bust, like boom or bust kind of thing. You can't be an extremist in that way, because if you are somebody who's not well capitalized, and let's say, or you have bills, you have children in private schools, or you have 8 dogs like me. They pretty much cost like having one child in a private school per year. But it's it's very intriguing to me to see that the mindset of, yeah, let's just pass, and then you pass, and then what? Like most people don't have the proof of concept to make the XFA last, and I think that's where the problem comes from. I keep blowing up XFAs. Why do you keep blowing up? Because you're full porting combines and you want to pass in 2 days, and you're not giving yourself time and chance to see whether you're doing something that is sustainable over time. Because let's face it, time, never mind accuracy and risk reward, time is the only judge of your performance. There's nothing else. So if you can't stomach that and you're like, oh, doing VEVALs is a waste of time. Yeah, I can say that, maybe. But to me, it's practice. So it's not a waste of time. To me, it's like, okay, let's see, if I can hold on to one combine and start it slow. So basically, as if it's an XFA, start it slow, make 200-300 a day, 200-300 a day, and then slowly, as you get a bit of a buffer and obviously get closer to target, then you can maybe size up a bit. So it's like, well, what's the cutoff point? What is the size that will harm the profits generated previously? And what is the size that I can sort of max out, but you're not in jeopardy of messing up the entire combine? And to me, that's no more than 3 minis. So 2 to 3 minis. But when I'm starting a combine, I usually start with like 2 or 3 micros up to 5, depends on what I'm trading. If I'm trading copper, I will trade 5 micro copper because it's slower and doesn't have that much movement compared to like something like gold, for example. But if I'm trading gold, it's going to be like 1 micro, and I always stick to particular risk per trade. But that's not just the end of it. There is a number of trades per day that goes into calculation, and the entire risk model. And, if we're talking risk reward, there's the risk reward on your trade, but then what most people don't look at is risk reward on a per day basis. So it doesn't matter what your risk per trade is, what your percentage of accuracy per trade is. What matters is how are your biggest days relating to your loser days? What is the risk reward of that? Can you string together 3 or 4 days? Or is it very patchy? Is it one big day, one big losing day, one big day, one big... Like, that means that the risk reward on a per day basis will become even more important to you because you're not able to string together like 3 to 4 days of good trading. But if you are able to, you will notice that you then have more chance to succeed because your proof of concept over time is now starting to come true. But no, people want a full port, they want to pass in 1 day. No day. Get straight to funded. Doesn't matter if we know what we're doing. That's just, yeah. Cedric says, do you use London initial balance on gold? Not really. I feel that London is usually just either a neutral day or a very, very small initial balance comparatively. So the initial balance that I refer to would be LME and Comex. So if you can't stay up for LME, like let's say you're located in a state somewhere, maybe in California or somewhere, then just focus on Comex. It's fine. But LME starts to give you clues over what they really want to do with it, because even though the volume is not massive, they are pretty important in pricing a lot of the metals, including copper, gold, silver, along with the Shanghai exchange. So not Tokyo, but Shanghai. And as and when we get closer to it, you will start to see the behaviors that will usually hold into Comex. So, LME starts at 11:40 a.m. my time, and then Comex begins at technically 1:20 p.m. But I started at 1:30, so yeah. Yuxel wants to know, do I use end of day GEX levels or intraday? Mostly end of day. The only time I will go to intraday, and on gold and silver, that's a bit difficult. You will probably have to go to, I don't know, some sort of correlated index or something. So, for example, like on crude oil, you don't get intraday levels unless you actually pull up the options chain yourself and look at the gamma flows yourself. But I do have a workaround because I use USO fund, so US oil fund, which does have intraday levels, but it only has it during active trading hours, not now. And there are similar funds that you can use for gold, like gold miners and stuff, and maybe GDX might be an idea. So yeah, but end of day, most of the days when we have a normal day, only on outlier days when everything goes a bit nuts, and all of the levels from the end of day are like sort of, long gone. And you're like, where are they? Oh yeah, can't even see them from here. That's when I will look at intraday, but most of the time it's just not necessary. Come on, move. Let's have a look at what DAX is doing today. Oh, okay, yeah. So I wanted to see DAX break through Asia low, and it did. So Asia wasn't massive on DAX. It definitely broke through, created one small single print. This is the value acceptance now, so I would not really fight this. I would like to see a pullback, and then I wouldn't be too opposed to doing shorts on DAX today. We had a wick above Asia high, so we created it just before. I mean, I suppose Eurex already tried that. This was a true Asia high. And then you have Eurex, so they wick it, but nothing really happens until London because Eurex doesn't have enough volume to push anything anywhere. And then it reverses. And now we have a breakout below Asia low. So whenever I see a value acceptance, and why do I say that? Well, because we have value acceptance. So so here is the London high, and now I'm expecting a full rotation at the very least. Actually, maybe not a full rotation because it's an equity index. 23,750 might be a good target. But if we get there before me, I still wouldn't be long on a day like today because of value acceptance. So when you get a value acceptance and a single print or a couple, that tends to not have great stats on closing out the single prints the other way. Maybe you'll find a trade if, let's say, the US is completely the opposite way and they're like very bullish, government reopening and all of that. That will pull DAX along with it. But, you know, again, that's out of hours technically for DAX and everything slows down. You can still find some pretty decent trades even during the New York session, but the main session for DAX is London. But metals, they're all a bit meh for this time of day, and everything's super slow. So yeah, maybe some shorts there. So I will let you know if I execute anything. Samuel says, "Hey D, with your triple threat, okay, triple threat expertise in trading, nutrition, fitness, and the journey has been a masterclass in discipline and growth." Thank you. Don't know if I'm a triple threat. I mean, I'm just somebody who likes doing a few things, and music was my big love for many years. Then I went into bodybuilding actually to try not to get fat as I got to middle age. And then of course D never does anything halfway, so D had to go do bodybuilding competitions and won 7 of them out of 11 that I participated in. And then I was knackered, and then I decided that it was enough. But I kept up with fitness. However, unfortunately, that's no longer a part of my life because the Pfizer vaccine got me. It was entirely my fault. I took it early. So effectively, it's like an over-vaccination syndrome. So I got a vax injury. Yay. And yeah, I'm still healing from it. And I will say that while the journey has been challenging, I've learned a lot about myself through the chronic illness. Because, you know, I was always the person that just kept pushing and pushing and pushing. However tired you are, you're like, F tiredness, I'm just going to keep going. And there were days when I would be so exhausted from like working for 20 hours, then I would go and sleep for 4. Like, who needs sleep? I was one of those, right? Well, that all changed massively. So I don't know, maybe I can make a series on my channel about navigating and still keeping businesses with a chronic illness. I don't know whether that would be interesting, because I think there's people without a chronic illness that have a lot of excuses, and even though they are not ill, they still don't do what they want to do. So that's very interesting to me. But yeah, and I wouldn't call it discipline. I think it's just rewiring your brain to do the same thing over and over, and then it's like brushing teeth. So you need to aim for all of these skills. Anything that you're doing right now that you don't like, you need to tackle it one by one, not all at once. Because, you know, when you're changing your habits, like let's say you want to get fitter, stop smoking, eat better, you wouldn't do it all at once. So if you tried, you're going to fail at all of them, right? So you have to focus on one thing. So right now, looking at your trading, what is the worst thing for your trading? Where are you tripping yourself up? What's the biggest hindrance in what you're doing right now? Is it oversizing? Is it overtrading? Is it both? If it's both, well, you have to pick one of those. So maybe focus first on oversizing. So size down as much as possible to try and reel that in. On combines and XFAs, you do have trades per day limits. And in the beginning, when your brain still doesn't have the neurons and the efficient energy pathways to deal with a new difficult skill, you have to give it shackles. You have to chain it up. So risk tools and TopstepX are excellent for those purposes, because it's, you know, it's one of those things where you have to tell your brain that this is not acceptable. There are consequences to this behavior. Until you start doing that, it's all going to be just, oh yeah, whatever, I'll do it tomorrow. Oh yeah, well, today I messed up again. Oh, today I did something stupid. It's like, yeah. So it has to be done one thing at a time. All right, so we have a little bit of a sell-off here, but it's still not reaching any level that I have here. And again, part of discipline, part of being a trader is to wait for those levels. So I pop them in the chart on the chart for a reason. For me, just to go short is like, because I'm in a combine, that's great. I can do some punts, but this is not a punt that makes any sense because gold is inside initial balance. Silver, I mean, silver technically is also inside initial balance, so there is nothing here. Like, I don't like trading inside that first hour. I want the price to exit that, and then I always find that that is a smoother trade because it's a sign of other time frame participants. You know, initial balance is usually market maker territory, and frequently has a lot of fake outs, even during Comex and NYMEX. So yeah. Man 3 list. God, is anyone else annoyed that they removed like custom handles and they just have usernames on YouTube? Is anyone else annoyed, or is it just me? I don't know. Because, you know, before you could put nice sort of Market Stalker D, and now it just says Market Stalkers, which is my channel. It's like it's a channel of Market Stalkers, right? And yes, I run it, but I'm Market Stalker D, and usually before this new change, you could put it down. So now all of these names are just like Cedric 6565. So annoying. Yeah. And it's very difficult when you're running a stream to kind of read out some of the usernames. And some of the usernames are like really complicated as well. They have a ton of numbers in them, and it's like, what? Okay, so anyways, the question is, how would you scale 2K into 10K? By not focusing on, I'm scaling 2K into 10K. That would be step one. Focus on the process. If it's your money on a small account, really I wouldn't risk more than 1% daily loss limit, which means that you have to scale down so much that you can fit whatever the number of trades you do, into that 1%. So 200, is it $200? It's not going to be 200. It's going to be $20, isn't it? Let's do it easy way. Yeah, it's $20. Why? Because that will be safe. So can you do that even with micro futures? No. Can you do that with YM? Limit yourself. Micro DAO. You can probably do that with micro DAO. But you won't be able to do that with gold. You certainly won't be able to do that with micro silver because it's $5 a pop. You might be able to do it with crude oil, micro crude oil. But even so, $20 daily loss limit. I just don't think you should be trading your own money if 2,000 is all you have to trade with. I know it's an unpopular opinion. Why trade $2,000? Like, what is that going to bring you? It's not enough. Like 20 grand, now we're talking, right? Even 10 grand, I think it's too little for futures purposes. Watching paint dry on metals. It's not a real song, obviously. Yeah, so sideways movement, like we get, what, 65% of the time on gold and silver, maybe even 70%. Like, how many days do we spend together where this time of the day it's literally just flat? But it's not even flat like towards the edges of the range, because I could trade that. It's just like flat middle of the middle. So I still need it. We've got a range, but I would still need gold to either wick above the high or wick above this range low, and maybe grab a few ticks to the upside. All right. Let's have a look at chat. Gear says D, and I know who you are. So yeah, I know that the username is weird, but Gear, yeah, recognize you. It seems to me your energy level is back to good, normal compared to 2022. Not quite. So what happens is that I am better. Okay, I am better. Now, Gear, you were there through the worst of it. Like on those days, I couldn't even sit up. I felt like I didn't, it was such a weird thing. Like I felt like I didn't have enough strength in my neck to keep my head up. Like it was just such a bizarre situation for me that when, working a million hours a day, being at the gym 3 hours a day, and then still working, I was a crazy person. And then, like I said, the whole thing happened. I am better. So the crashes, I still experience them. And for those of you who are familiar with myalgic encephalomyelitis as a result of vaccine injury or long COVID or whatever, it's all the same disease. The difference is that before I was able to work crazy hours, and then it hit me, and then I literally had to nap 3 times a day and then sleep 14 hours overnight. Like 8 hours wasn't cutting it, 12 hours, not quite. And then you sleep for 14 hours and you wake up and you're still tired. And you're like, what? What is happening? And then that went down to just me getting like a lot of pain that was not really explained by any tests. All the tests came back normal. It's probably one of the worst things that you can hear in your life when you can't get out of bed and your legs are not working and the doctor's going, your tests look normal, everything's fine. And you're like, what do you mean? Like at that point, you just wish that it's not like you want to be sick, you just wish that there's some sort of an explanation. So when you saw me back in the day, and quite a few of you have, you were my market stalkers, you've been with me for years. If you go back to look at some of my streams from those times, I look like death, right? Like death. And I felt like death as well. But then I had 18 months of hell. Like I couldn't get out of bed, had to stop the streams, had to stop everything. That started to improve a little. I think that was like a year ago, right? But I was still experiencing the crashes. They're like post-exertion malaise is what it's called. And they were still horrendous. Like I would need like 3 days of just staying in bed completely in a dark room with like earplugs and an eye mask. No fun, no TV, no nothing. Maybe I could listen to an audiobook, but everything else was just like overstimulation. Like I, very, very sensitive to all external stimuli. But then I noticed that one day, because it's not linear, it's not like, oh, now I'm better forever. It's like you're better for a few days, then you have a crash because you overdo it because you think you can. But one thing is that for sure that my baseline energy levels are higher now. Does that mean I don't crash? No, I literally had a crash yesterday, but I'm able to get out of them within half a day, rather than 3 days, a week, 2 weeks. One time it lasted for 5 weeks. That's lovely. So yeah, you learn a lot of stuff about yourself, and all the nonsense trading decisions that I used to do just because I was sitting there and clicking buttons, it almost went away. So I learned how to compartmentalize and to just trade the times of the day that work for me and not to stare at other times and wasting your mental capital. So there's definitely that. But am I back to normal? No, I still can't socialize without severe repercussions. Traveling is extremely, extremely difficult for me. Every time I go see my mom, I have to account for at least 2 days crash there and on the way back. I have to rest through the day like an old person, like as if I'm like 90 years old. I will fall asleep very quickly, which is very unusual for me. And some days, sunlight bothers me. Artificial lights, thank goodness, don't. these days. But oh my God, sunlight, I can't handle it still. So if it's super glary, I need to like be a right little weirdo with hats and stuff. But yeah, you definitely learn stuff about yourself, and all of the nonsense things that would stress you out in your trading, that has to go away when you have a chronic illness that affects your energy levels, because you don't have enough battery in the day to deal with nonsense times of the day, right? So you have to compartmentalize. So although it's been a hugely traumatic experience, and just my whole life going down the pan, it did teach me a lot about how I should focus. But it's not an easy process. Obviously, I was forced into it. Otherwise, I used to trade, DAX in the morning, then some metals in the middle of the day. Then I would trade my energies, and then I would trade YM, NQ, ES, or whatever else would look good at the end of the day. So it was like literally 12 hours of just looking for setups, doing between sort of like 10 to 15 trades, aiming for 2 to 3 on each product, right? And that worked until I got sick. So then I was like, now I have to re-examine everything I know about myself. So I just went through my stats. I'm like, okay, that shouldn't be there because it's not high enough profit. I should definitely focus on this part of the day. But then there was also a thing where the markets were moving very quickly at one point, even after the lockdown. So it was like very fun. It was very fun. But I couldn't even be a part of that. Like when crude oil was still moving, I started getting really sick. So I'm like, okay, I have to move away from that. So I was still trading it and it was still okay. But then it had a personality transplant. So now it's so slow that it's too slow for me. And it's fallen below that 180, 200 per day or per session cutoff point. So until that comes back, and until we are able to have some follow through on crude oil, rather than all of the range being done in 30 minutes, that I don't want it. So yeah. Can someone from Trinidad and Tobago trade with Topstep funding account? That completely depends whether the country is actually approved by the CME or not. Because remember, the CFTC rules it's not Topstep, right? It's not Topstep. It's the whole futures industry. So if CFTC doesn't support a country, they will not be able to trade with Topstep. It's just how it is, right? So, I come originally from Serbia. I don't have their citizenship or anything. I'm British for the last 25 years, but every time I'm over there, because it's not an approved country, I can't trade my live. So whenever I go visit mom, I have to put the live trading with Topstep on the back burner and just practice, do whatever, trade my own account. But yeah, okay, still range bound here. Gold is tagging VWAP, but it's still contained inside the initial bounce. So if we're going to tag this into some kind of a long failed auction, that wouldn't be a bad idea. But I would like to see it at least take out Asia low. Otherwise, it's all a scalp. Because until we tag some bigger levels, there is not much opportunity for me personally. And I mean, even this initial balance, I mean, it's large enough, but I mean, gold is super crazy with ranges at the moment, so yeah. But yeah, I just don't like the fact that VWAP is like right there. And on silver, and I think I'm going to focus on silver today. I just like it better. I think I'm with Coach Robert the last 3 weeks because he despises gold. Absolutely hates gold. As soon as I start talking about gold, he's like, yeah, I'm going to leave the room now. I'm like, oh, okay. But yeah, so last 3 weeks I'm with him. It's gone a little crazy. Gone a little crazy. Right, so the IB low where it got created, it's not too far away from this put support. So just overall how the market is looking, I like this a little better. Now, one redeeming quality in gold is that we do have a call wall at 40.80. And that's been holding. But again, when there's a consolidation right above the call wall, why didn't they push it higher? You know, if this is a support, why are we not away from the call wall if it's such an important stabilizer level? So I don't know. To me right now, I think gold has some space to the downside. In fact, even a 4-hour chart looks a bit flat. But I think inside this whole consolidation, there could be opportunities from slightly lower down, not beyond the realm of possibility that they go and tag the low from 14th. Is that a Friday? Yeah. I mean, that would be an extreme move. That would take an external catalyst, I think. And didn't they unwind enough? Another thing that I can see on the daily chart. So this whole pattern, this is called a 3 inside down. Why? Because there's an inside bar and then it smashes down. Now on futures, it's a little bit different than some other asset classes, but this is the 3 inside down pattern. Whenever you have a 3 inside down candle, I know that it looks like an evening star, but it actually is more like a swing in its own right, okay? And frequently, statistically, after the 3 inside down or 3 inside up to the opposite side, the down candle, that's all the range that they're going to do. So I actually look at 3 inside down opportunities as a decent pullback where I can look for further longs. Now let's see if silver has the same thing. Silver has the same thing. So yeah, both of the metals, except I think, even on the daily chart, look at it. So gold is a doji, silver, bullish candle. So I would be more inclined to long silver. But that's just my personal, personal preference. I think silver is stronger. So I'm going to trade that later. Mitesh says, new here. Just wanted to ask, how have you done your settings for the fixed range volume profile? What are your settings? I don't have a video on that because I can just show you. Like, 2 minutes, if that. Let's just go through that. So I'm going to remove it. So you go to indicators, obviously get the fixed range, volume profile. Then you look for Comex start. That's this candle. Well, a little bit before then, but this will do. And then you drag the previous day. I drag it all the way through to the end of electronic trading. Some people who are purists, they will be ending it at Comex, which is 6:30 p.m. in my time zone. But I like to look at the entirety of the volume profile, right? And even if there's not that much movement and that much volume, but if they're moving on some days, like they keep going, I want to keep that in my analysis. And then when it comes to the settings, the placement is left. I did widen the box to 100%. I changed the color of the value area to be purple-ish. And I don't think I changed anything here. So row size 24, volume up, down, yeah. I mean, you can do total or delta as well. And value area volume is 70. And I use number of rows. What happens with tick per row? Just wanna... No. So I still prefer this. So 70% standard volume up, down, 24 row size, number of rows, style, 100% placement is left. Up volume, down volume, don't really care. So don't think I changed that. But the value area, I wanted it delineated from the rest of it in a better way. And I changed the POC to red. So yeah. Does that help? Very simple, right? So you can grab a screenshot of that and you want to make your profile, fixed range profile. Just know that on some charts, when the whole thing starts, it's not always, it doesn't always like plot it, especially if you like flip between left and right. So this is a left hand volume fixed profile. If you try and do the same thing here, it's actually going to not plot the profile because it's the right hand chart. It's technically a different chart. So you would have to repeat the steps. But other than that, I think it's fairly simple. I prefer TPO profile for sure. But this is what we have for now. They're similar. It's just that TPO profile has initial balance. You know, it has actual single prints that are not kind of smushed in the volume from the previous activity on the day. You can actually see it. So it's a bit different, but it's still very similar information. So yeah. And then some people use the current day's volume value. I don't like doing that as much. Like maybe if I'm doing a range trade or something. Yeah, maybe I'll look to have the price migrate back into the edge of the distribution curve, but I like doing that on P days and P and B shaped days. So when you have a big move for initial balance and then it settles in the top third of the profile, creates a new distribution curve, I will typically go in with the direction of the unwinding day. So either short covering or long liquidating, and then I will snipe it from the edge of that distribution curve with the day's direction and with some help from bookmap. Even though bookmap on range days can be a little bit tricky because, you know, obviously everything's slower, there's usually less volume, so you have to be pretty patient. I feel that, you know, range days call for more patience and precision out of any style of trading. And I think that's probably why I've never particularly resonated with it. I've learned how to get around it because it used to harm me a lot. But I'm a mean reversion trader still. However, these days, I would say I'm probably more of a chameleon. There he is. Because I will change the strategy depending on what the day needs rather than what I need, if that makes sense. All right, so still, I'm waiting for the same levels, right? So we'll see what happens as we get closer to LME open. And at some point, someday, over the rainbow, we might actually get the LME show. But yeah, so we'll be looking forward to that. Don't ask me when. Do not ask me when. But yeah, so we'll see. It's probably going to start lining up 40 minutes after I finish. But yeah, those are your levels. So watch how it behaves around Asia high, Asia low. For now, both of these are still inside value, with silver being a little stronger. Don't know whether I'm going to be trading copper today. It's looking super quiet. So I think I'm going to probably pause copper until a little bit later. Be careful with the energies markets because they are in rollover. So if you're planning on trading natural gas or something, or crude oil or RBOB or heating oil, if you're a weirdo like me, then just know that during rollover, the volume is split between the old contract and the new contract. So it's really tricky to find out what the hell they're trying to do. And it's all very weird. So it's either no movement or movement that is totally not matching what you're seeing that should happen at that level. So it's usually the commercial hedgers who are getting either their spreads in, so it just causes a lot of trouble as they're rolling from one calendar month to the next. So be careful with energies. I'm not going to trade energies for the next week or so. And really in the energies markets, because they roll every single month without a fail, you really have 3 weeks of good price action. And then you need to chill out from it and then come back to it again when things stabilize and everybody moves to the new front month, which will be January, I think. Yeah. All right. That's all I have for you today. So I will see you again tomorrow. And then tomorrow, I do believe I am also on the main broadcast a couple of times this week. In the meantime, like I say on my own channel, let's try to be less grasshopper and more market stalker. This was the Euro Trade. I'm Market Stalker D. I will see you very soon. Take care.